E-Traders RB. As you can see, I've made a real effort to present myself this morning. It's a beautiful 27 degrees here in Coolum, light breeze, blue sky as you can see behind you. We are the Tuesday before Christmas. I've been for a swim in the ocean, fantastic water, and today I'll be researching drone fishing, which quite a lot of guys are doing. Expensive to get into even once you've got your gear. You can basically take your drone out to sea and hover over bluefin tuna and drop some bait or line and bring them in. So hopefully I'll get into that and I can share that with you. Well, okay, the trend that I've been talking about since it happened, since my indicator showed me that it was taking place, has continued, and it will continue. So overnight. Okay, so just to give you a sense of reality in respect to money and profit, percentage return, I'll be up 20% this week to date, as of today. Sorry, that's not accurate. When the trend started turning, which was last week, I'll be up 20% for there. But anyway, I do happily provide links to my FX book accounts. One was just a baby one. I started at 250. That's double. That's still at double. So 100%. It should be a much greater return, but I haven't followed every single trend change with that particular account. I've been focusing on the macro trend, but from now on I will be following every trend change. So while that's been running, we had a trend change up and then a trend change down, which I didn't trade. I just saw that as retraction on the major trend, and didn't close out and reopen. So that's giving us a flawed example, but they were open in October. Both my accounts were opened in October. Excuse me. So it's been 2 months, hasn't it? So in 2 months we're still up to 100% on the account. Good returns, so 50 a month. Yesterday I spent quite a lot of time watching a YouTube video about Bernie Madoff and the whole Madoff scandal, which looking back on is really quite unbelievable. What he got away with, how trusting people were, in brackets, how stupid people were, and how much people lost. Just incredible. People, you know, those guys in the lower range lost $1 million, $3 million. A lot of people lost life savings, houses, their complete lifestyle. Of course, all the family, anybody that knew him lost money, and some very big money people lost all their money. So we're talking billions. And when the fund was sinking fast, as people were taking money out of it, he was busy encouraging new investors to deposit amounts of up to $250 and $300 million. And okay, so I was amazed to learn that the returns were a mere 1% a month. which doesn't sound a lot because it's not a lot, but when you get $250 million, 1% or 12% a year is a very, very good return. The other appealing feature of his fund for investors was the fact that people could call on their money at any time, and that's what they did, and that's why it went down. So he never really expected everybody to call on their money all at the same time until the crash. Yeah, so that's why his fund collapsed, because basically everybody wanted their money all at the same time, which is how a Ponzi scheme eventually falls down on itself. But getting back to the returns, 1% a month, 12% a year, very, very low returns when you consider what you could make with other forms of investment. It really made me scratch my head and think, why, if you had a few $100 million, why would you be trusting one person with that one fund, and why would you even trust anybody else with that money? I really don't. I couldn't trust anybody else with $100,000, really. So I think the point I'm making is be in control of your own money, which is what I propose or promote, and protect it, of course. Protect it from anyone who can potentially take it, and grow that money as quickly as you can, and live off it, which is what you can do with Forex. Forget about day trading. People keep talking to me about the 4-hour chart, and seriously guys, I really don't care about amounts of times that short. They're just far too short. I don't care what a price is doing in the day. I care what it's doing over the next few months, and 8 weeks or the trend. If you just I'm waffling here a bit, I know, but I've spent the last 4 years going from being a trader that felt like I needed to absorb everything like a sponge and learn it and relearn it and just drill down and learn everything about whatever economic news was coming out that day, and compare the history and so forth. None of that's really needed. Keep it simple, stupid. Not you guys, but me. And all you need to do, and this is in relation to the gold chart, other Forex charts I can't speak for because I don't trade them. But in respect to the gold chart, you will see, if you look at it on a weekly or a monthly chart, that it trends. There are times that look confusing where it's consolidating, but it'll be doing that on a major fib fan line or a major fib line or SR line. Yeah, it's as simple as that. It's just working through the process. Eventually it's going to break and it will continue to trend. So you just need to be patient. As Warren Buffett says, it's the only thing I've ever taken from Buffett. He says you need the knowledge, which is easy to obtain, and you need the patience. So all you really need as a trader is to know when the trend is starting, when the trend is finishing, and if it pauses throughout the trend, you simply just need to wait. Now, if you trade like that, and you trade every trend, you have found the holy grail of trading. which people say is very hard to find. And that's because they're trying to drill down on the 1 hourly or the 4 hourly or the daily, and you know, it's like watching a baby breathe as opposed to watching your child have another birthday and turn another year older. You know, it's your perspective. So don't watch the baby breathe, but focus on the year that's in front of us, what gold is going to do for this year. Have a look at what it did last year, which was essentially to go to a high and then come back to a new low, and have a look at the highs and low cycles on the smaller charts. Yeah, and you'll see cycles, and cycles are good because they give us highs and lows, but sometimes they're hard to see and they're hard to pick, and also keep in mind that those patterns can be broken. We're not always going to trade a repeatable pattern, and after a certain amount of time a pattern will change, because we'll be in a different cycle of the price movement. So we're coming into a new year, and that means we have formed the base for gold over the last 5 years. And I can show you that if you email me or text me, whatever you want to do, Skype me. And we are now using that base as support. So the trend will continue, and I will stay in it, and I will just compound my balance and live off the balance for really the rest of my life. And I'm 51, so if I'm lucky, I've got 30 years of trading and compounding my money. Have a good day, guys. Cheers.